Eric Muaded, Muaded.com, with this weekend's world market analysis for the weekend of October 17th and October 18th, 2015. How you guys doing? All right, let's begin by taking a look at how markets did close in terms of world markets. And we can see for the most part, nice closes on Friday. So good closes on Friday for most of the Asian markets. Take a look at how European markets closed. And we see that pretty much slightly nicely done up day, generally speaking. And we take a look at the Americas here, and we see that Friday's session, we see that Brazil is up slightly. And with 1 hour to go before the close of the weekend, US markets are also pretty much unchanged for the most part, slightly higher. Crude oil is up 2%. So let's take a look at markets. And just like we saw last weekend, the takeaway here is that there's a huge fight going on between most of the time frames, and it's a very confusing phase in the market. I would caution everybody who's taking any position, long or short, to be cautious because there's a good argument on either side. Take a look at the weekly for the Canadian market, and on the weekly, just draw a line connecting RSI weekly highs. You can see that this market is coming back to test that line there. If it fails to hold and if it sees resistance on the line, then clearly one can expect this market to be trending lower. Otherwise, if it can jump above that line, then obviously we might be beginning a new phase to the upside. And since it is right now before the close of the week here, as we go to the new week, confirming resistance, we have to assume that this is what is in play, that the market is positioning itself to move lower. Now, take a look also at another point of view, which is what you're going to see in pretty much most of these weekly charts, which is that they've come back to a level where they've been struggling lately on sentiment. Market's been struggling to hold above this level, which corresponds with this period since this break somewhere here. Markets have been struggling at this line here. So we haven't moved above that. Weekly charts are showing now that they could need a little bit of a push to break through resistance. Otherwise, if they can't break through resistance, then obviously markets are poised to move lower. Now, you're going to see this across all markets because on the daily charts, we can see that on the daily charts for pretty much all markets, they've come back to a level where they're testing the previous break level. So this break level here did bring the market off the highs. We haven't been able to move above that level. So right now we are seeing at early signs of resistance. If the market is to do well, it clearly needs to take out that line. So for now, if you're a bull, you'd like the market to go on and break out above that red line. Otherwise, the dailies are also showing potential for resistance for now. Compare that with the long-term monthly view for the Canadian market, and you can see that it has come back to where it has been finding support going back to the 90s. All these lows in the market, there were major lows. The market did bounce back above this green line for the market to be back on at least a nice multi-month, multi-year swing trade high. And so now the fact that this has held, that's very strong support. And until we see the market break through that green line, given this chart by itself, the monthly charts are suggesting that there is a possibility that these highs in the market here might actually be challenged. That sounds hard to believe, but that's what the monthly chart is saying. That's not my opinion. It's what the charts say, that as long as this line is holding here, there is a possibility that over time, the market with pullbacks and all that stuff, volatility, that over time the market might actually even test the highs it made recently. Let's take a look here at the German market. And what we can see on the German market, just like we saw, again, the weekly charts did turn a little bit down. So right there, you can see that red line. And I'm using that line because during the bullish phase, the market was finding support for swing trades on this line here. Every time it dipped with uniform activity below the red line, back above it for a nice re-entry. And again here, It was a good buy area once the market showed that uniform activity. Now, as of this week, this is looking like it is resistance on a weekly basis. Also, it is right now showing resistance based on the fact that it is coming back to test the 10-week moving average. Also, we can draw a line connecting the highs like that. And you can see they all come in contact to where the market is showing slight resistance. Market bulls would like the German market to break above that red line for this to be a nice indication of momentum to the upside. Right now, you can look at this with a down week, or if the charts stay like this, this is telling us that the market actually wants to pull back until it clears resistance. On the daily, again, this is consistent throughout many markets. If you draw a line connecting the highs like that, you can draw it that way. Actually, on this one, let's just go back to the break level there to keep it simple. This most recent break in momentum broke here, which was this break and a gap down. And since then, we haven't been able to move above the red line. So there's resistance here. Until the market can clear that resistance, one has to be cautious from taking the long side trade. So that's one view. If the market can clear the 50-day moving average and clear the red line, then maybe this market is reacting to the long-term monthly view. Take a look at the long-term monthly view for the German market. Let's go back to the 3-year monthly, and you can see that this month it is doing its best to move back above the 50 level on the monthly chart, and it is doing that with uniform action. So that right there, because it is uniform action below 50 back above, it could be a very strong signal that in the coming months the possibility is there that the market might challenge these recent highs. So be aware that there's that possibility, because the monthly charts are holding at the 50 level, something they've been doing for a long time. Let's take a look at the long-term monthly view for the German market. Last time there was a bounce on the 50 level was here during the lows on the pullback of 2012, and now it's seemingly doing the same thing. So that's the risk that I've been talking about, that actually the market could be finding support. So be aware that that is not out of the realm of possibilities for this market to actually start moving higher over time. Week to week might be down, day to day might be down, but month to month, as long as it is above 50, this market could take off and challenge recent highs. Again, take a look at the FTSE, and all these charts are the same. For some reason right now, most of the world charts are synchronized. You can see here there's resistance. The last time we broke through this line there was during this action, and the market did go down. Right now we are showing that this is also becoming another resistance area. If that's the case, then we are looking for this market to go lower, and we can only turn a little bit bullish once that red line has been cleared. Right now we haven't done so. Now that's the FTSE weekly. Take a look at the daily, and this is just, again, all the charts look alike. Here you can see that it needs to clear that red line, otherwise it's not moving higher. Take a look at the long-term monthly view for the FTSE. We'll just draw a line showing you where it's been bouncing over the last 10, 20 years. Right there. In fact, I can draw it a little bit lower. Right there, and you can see that line captures the 3 most recent drops. This drop there came on the line there. This lows came on the line. And again, this lows here came on the same line. So right now we are seeing uniform action back above the green line, which again on a monthly chart, this is looking very strong. It's only when we break through the green line that we can start looking for the market to tank. Right now it is extremely good support on the monthly charts. Let's take a look at the EWZ, the ETF that tracks the Brazilian market. And again, I'm pretty sure they're all the same. You can see here all these markets are reflecting the same weekly resistance, so let's not spend too much time. So you can get on with your weekend. Resistance there on a weekly chart shows that as long as that's the case, we should expect lower prices. On the daily, We also see the same type resistance recently. We talked about this last weekend, that it had come back to test that line, and that recent break goes back to this break. So as long as that's the case, and until at some point it can clear that red line, one can look for this to be resistance. Keep in mind we are struggling to hold above a declining 50-day moving average, which generally tends to indicate that the prices should be pointing down because of the resistance of a declining or at a declining 50-day moving average. Take a look at the monthly. If you take a look at the long-term monthly chart, there is an argument here. It might not be the best argument just because of the visual aspect of it. It's not ideal, but you can see that coming off the lows of 2000, this is where the market started this nice climb here for a very substantial move in the Brazilian market here. Nice upward trend that took about 4 or 5 years. If we take that line there, just draw a straight line like that, you can see that coming off the lows of 09, it hit that same level for nice lows there. And since then, every time it hits that level, there is a multi-month move higher. Recently hit that same line for multi-month move higher, and now we seemingly might be looking to coil back above that green line. If we can, that would suggest that the market is actually poised to go higher month to month, even for a market that has been struggling like the Brazilian market. Let's switch gears and go to China. So this is a China weekly chart. Just want to show you that on the China weekly, if you go back 9 years on the weekly chart, take the lows there and connect it to the lows throughout these periods here, you'll find that right now it is coming back and making perfect contact with that same line, which might explain the 4-5% gain this week because of support on that line. So here the weekly looks good. We take a look at the daily, and the daily is coming back to test the previous break. So that break right, that subtle break right there is what killed the market's momentum previously. So this break there was responsible for this drop in middle of June. So somewhere around here, that break took place there. Draw a line from there, and you can see that the market has come back to test this level. If it has intentions of moving higher, it needs to stay above that red line. Otherwise, if it cannot hold above that red line, then what we are looking at here is possibility of resistance around here, and then we have a pullback. So we have that fight going on between weeklies and daily charts in this example. If you take a look at the monthly for the Chinese market, take the lows here. Actually, take the lows of 2012 and draw a straight line like that. You can see that it connects nicely with the lows recently in the recent years, and it is bouncing nicely here, also showing good support at the 50 level on the monthly RSI. That might suggest that over time this market month to month might be poised to move higher, as long as that support on the 50 can still be seen. So as long as there is support on the 50 on the monthly RSI, I would expect that market to grind higher over time. Not to be left too far behind is the South Korean market. Take a look at the most recent support at the 50 level, beginning with the move above 50 here. All these moves with support at the 50 have been successful in holding the market together. All these drops have come with the market holding the 50 level and moving higher for multi-weeks, multi-months. And here recently we are back above that 50 level after dropping below it. So that's good support on the monthly. Let's go to the weekly, and you can see that the weekly, just like the other markets we discussed, the weekly has come back to a level of potential resistance. If you take a look at the recent break, it was in July, beginning of June actually, beginning of July. And we can see that break there corresponds with this movement. Draw a line from there so we can see around the 50. This can easily become resistance, as we have seen in other markets, unless the market can clear that level. The daily has come back to a level of resistance just as we saw in China. This line right there. which goes back to the break at the end of April, which is off the highs there. So the market needs to be above that line if it's going to be bullish. But if it shows resistance here with a move back below the red line, then one can expect this to retrace. Otherwise, it needs to be above that red line and trade above it to change the sentiment. For now, it's back at resistance. We have to wait for more data to see how it's going to respond. Either a breakout and a move higher, or resistance and a move lower. Let's take a look at Japan, and this is how it closed on Thursday. And we can see here that if we draw a line just like that, we can see that the most recent support came on this green line. So let me draw that so you can see it clearly. Most recent supports over the last couple of years, as far as the Nikkei is concerned, has been coming back with support on this green line, as you can see. Now we are seeing a slight resistance this past week on that same line. So if that is the case and it continues to show resistance, we might have to pull back. On the other hand, if the market can reclaim the level above the green line, if it can reclaim the level above the green line, then maybe there's a chance of moving higher. Take a look at the daily. And just like the other markets, it's coming back to test its recent break around the 50. That break led to this major drops there with major gap downs. And so we can draw a line from there, and it's around the 50 on the daily RSI, somewhere around there, where it has been showing resistance. That's one view. The other view is to draw a line connecting the highs like that, and you can see it connects nicely with the most recent highs in this market. So if the market wants to do well, and we haven't seen the break on the daily, if the market is to do well, clearly we need to see it move above those two lines, the blue line and the red line. We haven't seen that take place, so we have to assume that this is still looking like it could pull back. If you take a look at a multi-year monthly chart for the Japanese market and take the lows of 08, 09, lows of 2011 and 2012, draw a straight line, something like that, you can see that it is coming smack dead on to support line there, which might suggest that as long as this is holding, so let me repeat that, as long as that line is holding, this might actually work its way higher. And as long as support can be seen here and stays there, I think the risk here is that this might actually suggest that it might have to take out and test this recent highs of 2015. So again, a very simple chart connecting the lows just like that. It's holding, and because it's holding above 50, generally speaking, that means it is going to have to test, if not take out, these most recent highs. Now, Japan is not the only market showing potential to go back to new highs. Take a look at the Indian market by way of the Nifty. Draw a line connecting the lows of 2008, 2009, lows of 2011, and lows of 2013. On the monthly, you can see that they perfectly come in contact with the lows over the last 2 months right there. And again, just like we did on the previous chart for Japan, as long as that is holding, the suggestion here is that this market could easily, very easily, go on to take out the recent highs on the Nifty at about 9,000 and slightly above that. So the key is whether that line continues holding. So clearly, holding that line is extremely bullish. Otherwise, down the road, if we break through that line, that's going to be also very destructive. For now, we are seeing support. We have to assume that the market wants to go higher. And so again, to summarize the big picture as far as the Indian market is concerned, which is consistent with other markets, is if this can hold, that's very strong support. But we have to be aware down the road, if we break through that resistance connecting recent monthly RSI lows, if that breaks down the road, then that is when the market would start dropping significantly. For now, we are looking at support, which might suggest a market that wants to move higher. Yes, not every day or every week, but month to month might actually go on to test recent highs. Take a look at the weekly for the Indian market. We come back to this level here where it recently broke. There was a recent break here. That break on the weekly led to this drop. And so what is going on here on a weekly chart is we are testing that line. Just happens to be around the 50 RSI level on the weekly. If this is confirmed as resistance, then one can expect this to pull back just like we saw in other markets, and the RSI to pull back. So depending on whether it can hold above the red line or not is where we get the next directional move. Take a look at the daily, and the daily is coming back just like we saw in other markets to test this level here. So we either get a breakout above that level, or we show resistance with the double top here and we point down. So of course, you'd like to see the market move higher. What you want to happen here is for the market to trade above above the red line. And on the other hand, if you're a market bear, then you'd like the market to show resistance. So let's show that again. So if you're positioned short or have ideas of going short, you can see that that is where the market can show resistance, confirm resistance here, pull back, and also bring the prices down. So depending on which way the market decides, we might have an idea of where the short-term trend is going to be pointing. Now, if we take a look at the hourly chart for the Nifty, so hourly chart for the Nifty, and I'm using RSI period of 26. If I draw a line connecting the highs, you can see that as of the close of Friday, the market has come back to test that top side. So it's very obvious here, if this is confirmed as resistance, we drop in sentiment, which eventually influences prices lower. Otherwise, we go back to the idea that if the market can clear that resistance, it's a very obvious resistance. Again, going back about 6 months, if the market is to clear that resistance, then that would suggest that this would be above that blue line, and that market would want to break out further and probe higher levels. For now, since we closed on the line, we have to wait and see whether we are going to get resistance on that level or we are going to get a breakout. And since we are closing exactly where the line should be, we have to wait and see for that more information. Take a look at the Australian market, and I'll go through this one quickly because it's pretty much the same as we've seen in other charts, other markets, and just a line there connecting lows, and you can see it comes perfectly in contact with where it stopped this past month, which is good support on the monthly. Take a look at what the weekly is doing, which is showing resistance on the top side if you connect the lows or the highs. So that is showing resistance as we've seen in other markets worldwide, and also coming back to test the recent break. So that break level there, we can see that a line extension of this break point, which brought the market lower. We are seeing a backtest failure as of right now, suggesting that the market could actually struggle around here and pull back after a recent recovery. So that's what it looks like, unless and until we see that the market has enough momentum, enough strength to move above that blue line. So again, just draw that quickly. It's the same line that broke, extended, and now it looks like it is resistance. So bulls would like to see the market move above that blue line, and bears would like to see the market show resistance on the same line and move lower. So right now it looks like it's pointing down, the weeklies, suggesting there could be a pullback week to week. On the dailies, and we've seen this pretty much everywhere, the market is coming back to test the top side of the RSI. Most recently, you see this resistance area here was good for this double top. And even off the highs there, on a daily closing basis, it came exactly on that red line. So either we break out or we show resistance and we pull back. Take a look lastly here, South African market showing nice support at the 50 and holding above the 50. Very good support, which might be why it's up about 6% this month. On the weekly, just like the other markets, just same thing, coming back to a resistance level there. Most recent resistance was a double top on the weekly on that line, which was here, and now we are showing resistance. If that continues, the market might have to pull back if the next couple of weeks bring a breakout above that red line, then the market is gonna be recovering above recent highs. Take a look at the daily, and again, this is just same thing we've seen in other markets. Take the break there, that break in the RSI, kill that market from the recent highs, and draw a line from there. And you can see that we are right now coming back to test that line. If that is confirmed as resistance, expect your markets to be lower. So for the US market, what I'm going to say here is be on the lookout for my weekend part 1 for the US markets. I'll do that in a separate video this weekend. So those of you trading in the US, wait for my video, which is going to be part 1 of my weekend market analysis. Part 2 is always meant for subscribers. Enjoy your weekend. Good luck, peace, and blessings. I am out. Yeah. Talk to you guys later. Later. Alligator. Later. Bye. Bye. Ba ba ba. Ba ba ba. You still here? You still here? You still here? Markets are showing resistance on their weeklies. Right there. Markets are showing resistance on their dailies, as you can see right there. And then markets are looking good on the monthlies. So it's a very confusing time. So be aware that markets can surprise in either direction because of this good support on the monthly here and here. Eric Moore again. This time I'm leaving for real. I'm gone. Bye. Peace and blessings. No, I'm serious. I'm about to hit stop. I'm about to hit stop right now. I will. See ya. Blessings. 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 Blessings.